Somewhere inside the IRS's computer system, there is a number attached to your Social Security number that represents money you are legally entitled to and that you have never received. Not because you did anything wrong, not because you're being flagged, audited, or investigated, simply because the one piece of paper that would release that money to you has never been filed. Here's the part that should make you a little angry. The IRS is not going to call you about it. It's not going to mail you a letter that says, hey, you left some money behind. The system is built to respond, not to volunteer. If the form doesn't come in, the money doesn't go out. And for some of these credits, there's a hard deadline after which that money disappears from your life permanently with no appeal and no second chance. That's what today's video is about. Real provisions, real form numbers, real dollar amounts, straight from the 2025 tax year, including some genuinely new rules that came out of the tax law passed in the summer of 2025. No vague promises, no "you won't believe how much you're owed" nonsense. Just the specific things worth checking before you file this year, or before a deadline quietly closes on a year you've already filed. If this is your first time here, consider subscribing. Every week, this channel breaks down the parts of the tax code that affect retirees, in plain language, without the sales pitch. There's nothing being sold here, just information you can take straight to a tax preparer, a free filing site, or your own return. Before we get into the specifics, I want to talk to two different people watching this video, because both of you are about to make the same mistake for opposite reasons. And I don't want either of you to tune out the rest of this thinking it doesn't apply to you. The first person is the retiree who already files every year, sometimes with a paid preparer, sometimes with software, and assumes, if there were money available to me, my preparer or my software would have already found it. That's a comfortable assumption. It's also frequently wrong. A preparer working through a high-volume filing season is moving fast, applying the standard deductions and the standard forms to hundreds of returns. The provisions we're covering today, particularly the ones tied to how the 2025 tax law changed things for people 65 and older, are not always part of that standard workflow unless someone specifically goes looking for them. The second person is the retiree who doesn't file a return at all because their income is mostly Social Security, and they've always assumed they're below the filing threshold. So why bother? This is the person who stands to lose the most from this video, because here's the thing about refundable tax credits. They don't care whether you owe any tax. A refundable credit can put money in your pocket even if your tax bill is zero. If you've been skipping your return because you don't owe anything, you may have been walking past money every single year without realizing it. I'm going to address both of you on every point in this video. Nobody watching should walk away thinking, well, that one's not for me, without actually checking. So why does this happen? Why doesn't the IRS just figure it out and send the check? Because that's not how the system is designed. The IRS's job is to process the returns that are filed and pay out the refunds that are claimed on those returns. The word that matters there is claimed. The entire refund system is reactive. It responds to paperwork. It does not go back through your history and calculate what you would have gotten if you'd filed differently or if you'd filed at all. If nothing comes in, nothing goes out. And the money simply sits there unclaimed until the window to claim it closes. And that window is real, and it's not generous. If you're owed a refund based on a credit you missed on a past return, you generally have 3 years from the date you filed that return, or 2 years from the date you paid the tax, whichever is later, to file an amended return and get that money. 3 years sounds like plenty of time. In practice, for someone who isn't actively checking their old returns for missed credits, it slips by easily. Once that window closes, there is no extension, no appeal, and no way to recover that specific year's money. It's gone for good. Here's what we're covering. 4 real opportunities for missed refund money for seniors in the 2025 tax year. What they are, who actually qualifies and who doesn't, because that matters too, the exact forms involved, and the specific action to take on each one. Then 2 bonus segments: how to check your own old returns for missed credits in about 20 minutes, and the one question to ask your tax preparer that will tell you immediately whether they're up to date on the 2025 changes. Every figure I give you comes from IRS published guidance for the 2025 tax year, and I'll give you the form numbers so you can go look them up yourself. Point 1, the Earned Income Tax Credit and who it actually covers now, busting the misconception. Most people over 65 have heard of the Earned Income Tax Credit and immediately think that's for young families with kids, not me. For a lot of retirees, that instinct is actually correct, and I want to be upfront about that instead of pretending otherwise. If you're 65 or older, have no dependent children living with you, and you have some part-time or freelance income, the EITC's rules for filers with no qualifying children generally cap out at age 64, so that specific door is closed to you, and no amount of searching is going to open it. I'd rather tell you that clearly now than have you waste an afternoon chasing a credit that was never available to your situation. But here's where the misconception cuts the other way, and where a huge number of retirees miss something real. If you are raising a grandchild, a great-niece or nephew, or another young relative who counts as your dependent for tax purposes, your own age becomes completely irrelevant. The credit follows the child, not your birthday. A 70-year-old grandmother raising her grandson, who also has some income from babysitting, selling crafts at a local market, or part-time retail work, can claim the exact same earned income tax credit as a 30-year-old parent in the same situation. And the dollar amounts involved are not small. The actual numbers for 2025. This is a refundable credit, meaning if the credit is worth more than the tax you owe, the IRS sends you the difference as cash, even if your tax bill was already zero. For the 2025 tax year with one qualifying child, the maximum credit is $4,328, and your earned income and adjusted gross income both need to stay under roughly $50,434 if you're single, or about $57,554 if you're married filing jointly. With two qualifying children, the maximum jumps to $7,152, with income limits around $57,310 single and $64,430 joint. With three or more qualifying children, the maximum reaches $8,046, with limits near $61,555 single and $68,675 joint. The key requirement is earned income, wages, self-employment income, net income from a small side business. Social Security itself doesn't count toward this, but receiving Social Security doesn't disqualify you either. If you're collecting Social Security and you also brought in, say, $9,000 from part-time work this year, that earned income is what gets evaluated for the credit. And if you have a qualifying child living with you, that's where the real money is. For both groups watching, if you're a retiree with modest income who is raising a grandchild or other qualifying relative and you have any earned income at all, even small irregular amounts, this is very likely the single most valuable thing in this entire video for you, and it's the one most often missed, because almost nobody associates earned income tax credit with grandparent. It's claimed using Schedule EIC attached to your Form 1040. And if you had this same situation in a prior year and didn't claim it, that's a conversation for point 3. If your income is primarily Social Security, a pension and investment income, with no dependent children or grandchildren in your household and no earned income, this credit simply isn't built for your situation, and that's okay. Points 2 and 3 are where your opportunity is. The catch: there's an investment income limit that can disqualify you regardless of how much earned income or how many qualifying children you have. For 2025, if your investment income, dividends, interest, capital gains, rental income comes to more than $11,950 for the year, the EITC is off the table entirely, no matter what else is true about your return. One thing to do right now, go to irs.gov and search for the EITC Assistant. It's a short questionnaire, 5 or 6 questions, that takes about 3 minutes and gives you a direct yes or no answer based on your actual numbers. If you're raising a grandchild and have any income from work, it's worth those 3 minutes before you file. Point 2, Schedule R, the credit for the elderly or disabled, busting the misconception. This credit has existed since 1976, specifically for people 65 and older, or for people who retired due to a permanent and total disability and still receive taxable disability income, and it's one of the least claimed parts of the entire tax code. Not because almost nobody qualifies, but because most tax software won't generate Schedule R unless you or your preparer specifically navigate to it. It's easy for an entire return to be completed without this form ever appearing on screen. The actual rule in plain English. This is a non-refundable credit. And I want to be precise about what that means because it's different from the credit in point 1. A non-refundable credit can reduce the tax you owe, potentially down to 0, which can increase the refund of any tax you already had withheld during the year. But it cannot push you into extra money beyond what you've already paid in. So this isn't going to produce a 4-figure surprise check on its own. But for someone whose return would otherwise show a small balance due or a small refund, it can make a real difference, and it costs you nothing to check. The credit is calculated as 15% of a base amount, $5,000 if you're single, head of household, or a qualifying surviving spouse, or if you're married filing jointly and only one spouse qualifies. $7,500 if you're married filing jointly and both spouses are 65 or older or otherwise qualify. $3,750 if you're married filing separately and lived apart from your spouse all year. That base amount then gets reduced by certain non-taxable income you received, including non-taxable Social Security, and by a portion of your adjusted gross income above certain thresholds. For 2025, you become ineligible entirely once your AGI reaches $17,500, single, head of household, or qualifying surviving spouse. $20,000, married filing jointly, one spouse qualifies. $25,000, married filing jointly, both qualify. Or $12,500, married filing separately, living apart. For a lot of retirees living mainly on Social Security and a modest pension, that combination of reductions has historically brought this credit down to 0, which is exactly why it's so often skipped entirely by people and software alike. For both groups watching, 2025 brought a wave of changes to how people 65 and older are taxed, including a brand new $6,000 additional deduction for filers 65 and up, on top of the existing extra standard deduction seniors already received as part of the tax legislation passed in mid-2025. Because so much changed at once, it's worth having Schedule R actually run for your 2025 return, even if it produced 0 in past years, rather than assuming the same result automatically applies. The only way to know is to have the worksheet actually completed, which, again, most software won't do unless someone asks it to. If you're a higher income retiree with substantial pension and investment income, the AGI thresholds above mean this credit is unlikely to apply to you regardless. Your better opportunities are in points 1 and 3 if they apply to your situation. The catch. Because most tax software treats Schedule R as optional unless triggered by specific answers about your age and disability status, it's entirely possible to e-file a complete accepted return that never includes it, and never generates an error because nothing is technically wrong. The form simply never ran. One thing to do right now. If you're using tax software, search within it for Schedule R or credit for the elderly or disabled and navigate there manually to run the worksheet. If you use a paid preparer, ask directly, "Did you run Schedule R for me this year?" If the answer is no and you're 65 or older, ask why. It costs nothing to check and there's no downside to running the numbers. Point 3. The amended return window. Recovering credits from past years, busting the misconception. A lot of people believe that once a tax return has been filed and accepted, that year is closed, period, done, sealed, no going back. That's not true. The IRS allows you to file an amended return, Form 1040-X, to correct or add to a return you've already filed, including adding a credit you missed the first time around. The actual rule, in plain English, Form 1040-X is a 2-page form with a side-by-side layout. One column shows the figures from your original return, a second column shows the corrected figures, and a third column shows the difference, which becomes either an additional refund owed to you or additional tax owed, depending on the direction of the correction. You attach whatever supporting schedules go along with the credit you're now claiming, Schedule EIC, Schedule R, whatever applies, and either file it electronically or mail it to the IRS. A quick technical note. As of the 2026 filing season, the IRS allows electronic filing of Form 1040-X only for the current tax year and the 2 tax years immediately before it. If you need to amend a return older than that, it has to go in on paper. Processing times differ quite a bit depending on which route you take. Electronically filed amendments generally take somewhere in the range of 8 to 12 weeks, occasionally stretching to 16, while paper-filed amendments can take 16 to 20 weeks or longer. You can track either one using the Where's My Amended Return tool on irs.gov, usually starting about 3 weeks after you file. And then there's the deadline that makes this time-sensitive. Generally, you have 3 years from the date you filed the original return, or 2 years from the date you actually paid the tax for that year, whichever is later. Once that window closes for a given tax year, any refund tied to that year is gone permanently. There's no extension and no exception for "I didn't know." For both groups watching, if you're a grandparent who had qualifying earned income in a past year and a grandchild or other relative living with you as a dependent, but you didn't claim the earned income tax credit because you assumed it wasn't for you, that's exactly the kind of missed credit Form 1040-X exists to fix. The key is timing. Count 3 years back from the date you actually filed that original return. If that 3-year mark hasn't passed yet, you still have time to amend that year and claim what you missed. The same logic applies if running Schedule R for a prior year, especially with the updated 2025 thresholds in mind for your current year return, or simply because it was never run before, would have produced a credit you didn't receive. As long as you're inside that 3-year window for that specific tax year, amending it can recover that money. The catch: filing an amended return to add a missed credit is, in almost every case, a straightforward net positive, but it does put that year's return back in front of the IRS. If there's anything else on that original return that was wrong, a missed form, an incorrect filing status, anything, it's worth correcting all of it at once rather than going back a second time. Both because a second amendment for the same year can get flagged for extra review, and because it's simply more efficient to fix everything in one pass. One thing to do right now: pull out your returns from the last 2 or 3 years. For each one, check whether Schedule E, IC, or Schedule R appears anywhere in the paperwork. If either is missing and you think you might have qualified based on what we've covered, take those returns to a free filing site. More on that in point 4. And have them run the numbers for those years. If it turns out you missed something and you're still inside the 3-year window for that year, file Form 1040-X before that window closes. Point 4. The free filing programs that make all of this cost nothing, busting the misconception. A lot of retirees assume that fixing any of this, filing for the first time, filing an amended return, running a worksheet they've never used before, requires either paying a professional or buying tax software. For most people watching this video, that's simply not true. The actual rule, in plain English: the IRS funds 2 free tax preparation programs that exist for exactly the situations covered in this video. The first is VITA, Volunteer Income Tax Assistance, generally available to people with income around $67,000 or less, as well as people with disabilities and people who speak limited English. VITA sites are staffed by IRS-trained volunteers and are typically found in libraries, community centers, and houses of worship. Preparation is completely free, and that includes amended returns. The second is TCE, Tax Counseling for the Elderly, aimed particularly at people 60 and older. with volunteers who specialize in exactly the retirement-related questions we've been covering: pensions, Social Security, and credits like the ones on Schedule R and Schedule EIC. The largest network of TCE sites is run through the AARP Foundation's Tax Aid Program, which operates thousands of locations nationwide. And importantly, you do not need to be an AARP member to use it. A retiree who uses VITA or TCE to file an amended return claiming a missed credit pays nothing for the preparation and keeps the entire amount of whatever credit they recover, for both groups watching. If your income is on the lower end, you likely qualify for VITA outright. If you're 60 or older, TCE, most often through AARP Tax Aid, is available to you regardless of income on its base program. Between the two, there is essentially no income level at which a retiree has zero free filing options. The catch: these sites run on a seasonal schedule, generally open from late January through April, and appointment slots, especially ones that can handle amended returns for prior years, fill up quickly. If you're planning to use one of these programs to revisit a past return, the earlier in the season you call, the better. One thing to do right now: go to irs.gov and search for the VITA locator or the AARP Tax Aid site locator. Enter your zip code and find the nearest location. Call ahead to confirm they handle amended returns and ask about scheduling. When you go, bring your original returns for the years in question, your Social Security statements, and any W-2s or 1099s showing income for those years. 2 bonus segments before we wrap up. Everything above covers a first-time filing, a current year return, or an amended return for a prior year. What follows is for 2 specific people: the retiree who wants to make sure none of this ever slips through again, and the retiree who's starting to wonder whether their longtime preparer has been missing this stuff year after year. Bonus 1, checking your own past returns in about 20 minutes. You don't need a tax professional to find out whether a past return missed something. You need your old returns, the IRS's free interactive tax assistant tool, and about 20 minutes. Go to irs.gov and search for Interactive Tax Assistant. Choose the credit you want to check: the Earned Income Tax Credit, the credit for the elderly or disabled, or anything else relevant to your situation, and answer the questions using the numbers from your old return. The tool will give you a clear eligibility determination and, where applicable, an estimate of what you would have qualified for. If that tool tells you that you qualified for something that doesn't appear anywhere on your old return, you've found a real documented basis for filing Form 1040-X for that year. It's worth printing the tool's results and keeping them with your amended return as supporting documentation. It gives the IRS a clear paper trail for why the credit is being added, which can help the amendment move through smoothly. Bonus 2. The question to ask your preparer before this year's return is filed. If you use a paid preparer, there's one question that will tell you a lot about whether they're current on this year's changes. Did you run Schedule R for my return this year? And did you check whether I have a qualifying dependent that might open up the Earned Income Tax Credit? A preparer who's on top of this will be able to answer specifically, yes, here's what we found, or no, here's why it doesn't apply to your situation. A preparer who responds with a vague answer or seems unfamiliar with what you're asking is worth following up with. Ask to see the Schedule R worksheet, or ask them to walk through whether anyone in your household counts as a qualifying child for EITC purposes. You're paying for this service, and a specific question deserves a specific answer. If you consistently get vague ones, that's useful information too, bringing it all together. Here's the one idea I want you to walk away with. More than any single form number or dollar figure, the refund system only responds to paperwork. It doesn't notice on its own when you qualify for something you didn't claim, and it doesn't recalculate your past returns for you. It waits. And for any given tax year, the window to go back and fix a missed claim is 3 years. After that, whatever was available for that year is gone for good, with no exceptions. The retirees who end up recovering money they were owed aren't the ones with the most complicated returns. They're the ones who know which boxes to check, which credits are worth a second look, and that there are completely free programs, VITA and TCE, built specifically to help them check. If someone in your life, a parent, a sibling, a neighbor, someone from your church or community center, fits either of the two situations we talked about at the start, this is worth passing along to them. It doesn't matter whether they've filed with the same preparer for 30 years or haven't filed at all because they assumed they had nothing to gain. Both of those people are in this video, and for either of them, the only thing standing between nothing and a real number on a refund check is 20 minutes with a free tool or a phone call to a VITA or tax aid site before a deadline they don't know exists quietly closes. In the next video, we're going to look at one Social Security filing decision that permanently shrinks your monthly benefit for the rest of your life, and the lesser-known rule that gives you exactly 12 months and only once to undo it if you change your mind. Most people who could use that rule have never heard of it. I'll see you there.